We're generally seeing the market on the side of buyers just because there's a lot of people looking to sell, and now we're seeing that things like weak economic conditions, high cost of living, and a low household savings rate is contributing to affordability constraints. So that's reflected in things like a little bit of a slippage in the preliminary auction clearance rate, and also in the first week of spring where we saw the final clearance rate come down to 63%. Nationally, home values have slowed as well. But I think it is worth noting that there's a lot of variation depending on where you are in the country. So I would say it is firmly a buyer's market in Victoria and Tasmania, where you've got way more sellers than buyers right now. 6 consecutive months of decline in Victoria, and the clearance rate trending down there as well.
What kind of price markdowns are you seeing?
For the Victorian housing market, in Melbourne in particular, we've seen values are down about 5% from a peak in March 2022. In Tasmania, values are down as much as 12% from their peak. But then you've got really different conditions on the other side of the country. In WA, values continue to rise 2% through August, and overall total stock levels are very low across areas like WA, South Australia and Queensland. Although in the past few weeks we have seen, even in those very tight markets, new listings have started to rise a little bit.
Measures to address the housing shortage are being debated in the Senate this week. What evidence do you have that private investors are getting out of residential property?
I think the best indicator we have, and most timely indicator we have for investment activity, is new investors coming into the market. And that's reflected in ABS housing finance data. Now, investor lending has increased year on year nationally by about 35%. In Victoria, for example, where we've seen an increase in land tax for investment properties kick in from the start of the year, we haven't observed a decline in investor activity necessarily, just slower growth than what we've seen nationally. So I think it's fair to say that investors still make up a pretty big chunk of the market, in fact, a relatively large chunk in terms of the value of housing finance. But what we are seeing in Victoria, where the investor growth is a little bit slower, is that first home buyers seem to have a little more space in the market. And what you see is the share of housing finance of first home buyers in Victoria is consistently the highest share of the states and territories. You could argue then that with investor activity being a little bit softer, first home buyers have a little more room to play in the market. But we also need to be realistic that at the end of the day, investors provide rental supply, so that could keep a bit of a floor under rent prices as well.
There has been a debate about what it would mean for renters if private investors start to exit the market. Can you clarify for us what it would do to rental prices if a private investor exodus was to take place?
So if we see less investment activity in the market, it's fair to say that it could have some impact on rentals in the short term from the supply side. I think it's worth acknowledging that when an investor sells a property, it's possible that an owner-occupier or even a first home buyer could purchase that property, but realistically, they're not always going for the same type of property either. In any case, we are seeing pretty strong investor activity, and even in Victoria where it's weak, the growth in rents is slowing down, and that kind of comes back to the demand side of the equation. Things like more share housing and an increase in average household size starting to occur, and passing a peak in net overseas migration. So the level of investor participation isn't the only thing that's having that influence on rents at the moment.
Eliza, Owen, great to speak to you.
Thanks for having me.